I'm Lee Scully. I'm an associate investment advisor at Bishop Cross Border Investment Services. This is Stephen Bishop, founding advisor at our group. We're going to talk about the fees and the cost of wealth management services. Every client asks about it. Every client should. We have our own view on the topic. We're always clear about it, always upfront about it. I think, Stephen, it might help to get your perspective on watching the industry evolve since the mid-80s, how the structure and the players all shifted towards certain models and how that led to where we are at the moment. So maybe I could ask you to tell a little story for us.
Well, that's a long story. Well, I guess where it started was, I can't really say what year it was, but when I started back in the mid-80s in the industry, we were basically stock and bond brokers. No one bought mutual funds. And we just traded stocks and bonds. And but then as the industry evolved, and then in not in the United States but in Canada, in 1987, the big banks in Canada bought the big brokerage firms. And after that, the industry started to evolve more into financial services, broad-based financial services and things like that. And then also at the same time, through that, the regulatory bodies in Canada started becoming more involved in supervision of the industry and protecting the public, let's say. And there was a point in there where I don't want to say a decision was made, but the industry kind of evolved into this fee-for-service model where it was deemed as being in the public's best interest. And there's an argument there for that, because when the industry was commission-based, there was, not always, but there were always cases of brokers with excessive activity because they were generating a commission every time they processed a trade.
Churning would be the
term.
Churning,
yeah, that's one of them. And so when the fee-for-service model started becoming more accepted and more I don't want to use the word pushed, but
adopted.
Yeah, that's a good word. Adopted. It changed a lot of things, and the logic behind it at the time, and it's still the logic at the time. It's just more complicated now. Was that it presented the fairest model for the client, so the clients knew right at the onset of the relationship what it was going to cost them for the year to have that relationship. So if you have a fee-for-service model and a person has $1 million invested and their and if their fees like 1.25% or whatever the number is, they know right then what they can expect for the year, no matter what's going on. So what it did was it leveled the playing field for the clients, so that the clients knew what they were going to get for what they were paying for, and it eliminated any question of the broker, or as they're now called, advisor. No one's called brokers, stockbrokers anymore, but that's really what we are, I guess. But it also made it so that there was no question that the advisor was doing what was in the client's best interest.
Exactly.
And not in their own best interest.
Yeah.
Right? But that was the case in many cases, before this model became more adopted, let's say. And if you fast forward to today, so that was sort of when it was just in its infancy, where it was to make a more fair model so that everybody understood what was going on, so they didn't really have to question what was, why was there so much activity and so on. But then as things evolved more, because I'm looking back over 40 years of this, it progressed into bigger things, because that model now, like the model that we offer, it doesn't just encompass the trading. It encompasses help, with everything.
Financial planning, tax planning, insurance specialists if you need them, charitable giving, estate planning.
Yeah. It's all so all of that stuff gets wrapped up into the fee for service. So really what we have today is we have a comprehensive package, let's say, in financial services, where people get a lot of things in exchange for what they pay for a fee for the service. That's the fee for service, right? It's not just about trading. It's not just about trading stocks, that instead of paying a commission every time you trade the stock, you pay a fee for the year. So you get so many free trades for that fee, and everybody knows what they're going to pay, and everyone's happy, right? Well, now it's big. It's comprehensive. It's a
service. It's
a full service. It's a full service advisory platform for financial services, not just investments. And when I think back over, my career with it, it's kind of funny in a way how we understand it because we're in the industry. But I find it interesting how most people don't really understand what they're paying for, and people need to know this, because there's a huge value added in a fee for service relationship. If someone just wants to trade stocks, we'll go to a discount direct trading service, the internet-based things. You don't need a full service fee for service advisor.
Right. Not everyone needs that.
No, not everyone needs it. If you don't need it, don't go to people like us and the other professionals. Just go find it, right? But for those that want help with their investments and financial planning and
cross-border investments.
Well, in our case, it's cross-border specialty.
Can't really do much of that solo, so.
No, you cannot. So there's value in what people pay for a fee, and people need to understand that. And all I can say, this is a short episode here, but because it's a bigger topic, but all I can say is ask, when you engage either with us or anybody, ask, what do I get for this service arrangement that I have with you? And find the value in it. And if you don't see the value in it, well, don't engage in it. Yeah. Because there's huge value in what professionals in this industry are doing, far beyond providing a stock trade. Yeah. So I can leave it at that.
I think as long as they know how much they're paying and what they're getting for that payment. Because what I do when I meet someone who's interested in engaging our services, I'll always walk through the math. I don't think many other advisors might not do that, but I'll say, if you've got X amount of dollars at X percent fee, it's X dollars per year in fees. And then I talk about, what do you get for that? So it's important that they know up front what they're expecting.
And in taxable accounts, the investment management fee they're paying is tax deductible. Right. And there's all kinds of little pieces to this. It's not just if anyone's going to focus on the fee, they're focusing on the wrong thing, right. Because there's no professional service in this industry that where a person can expect to get all of the things that they get through that relationship for nothing. It does not happen, and it isn't going to happen. And that's a huge difference today from 40 years ago when people would pay us a commission to do a stock trade. It is a whole different world now. It's not the same. And, the saying, you get what you pay for, is probably quite accurate in this situation. So people need to ask.
Agreed.
And have the conversation.
Agreed. Yep. So that's our episode on fees. Thanks, Stephen.
You're welcome.
I'm sure we'll pick this up on another episode.
Okay.